Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXPesa. So today, first of all, apologies. My voice is a bit broken. I have a really bad flu, so I'll try to speed up things or show some speed. So, as usual, remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So there is a lot of things happening in the markets as per today, and some of the highlights include events on the economic calendar. Uh, Today being Thursday, the 15th of January, um, we have quite a number of things. One, in early morning, if you look at the UK economy, the GDP month over month came in higher than expected at 0.3%, beating expectations of 0.1%. Of course, higher than the prior month's reading of negative 0.1%, which was a surprise uptick in the market. So, a bit moving backwards, yesterday we had US retail sales data coming in hotter than expected. With sales in December rising by 0.6%, beating expectations of 0.5%. Core retail sales came in at 0.5%, beating expectations of 0.4%, so that was good. Then producer price index, which is a measure of wholesale inflation, came in as expected at 0.2%, and core was even lower than expected at 0.0%, meaning that forward prices for the US economy are destined to be much lower. So if prices are moving down and inflation is moving down, just as we saw on the CPI report on Tuesday, where inflation remained at 2.7% and core increased by 0.2%, basing expectations of 0.3%, basically shows you that inflation is slowing down, and that provides the Fed more room to cut interest rates, even though we don't expect them to be cutting on this month's meeting. So one more key highlight was crude oil inventories in the US, which came in at 3.4 million, beating an expectation of negative 1.7 million and a previous hit of negative 3.8 million draw. So in this case, seeing crude oil stocks in the US increase shows that there is a sufficient supply in the market, which basically led to much weaker prices, as we will see later in the presentation. So for today's calendar, it's full of Fed member speeches from FOMC member Bostic, FOMC member Barr, FOMC member Bakin, as well as Schmid will also be speaking today at different times from 4:35 p.m. through to 9:30 p.m. So other than that, I will be having the weekly unemployment claims from the US side, where we're expecting the unemployment claims to have increased to 215K in the last week, which would be a surprise 7K uptick compared to the previous reading of 28K. So remember what we said on Tuesday, that if inflation is moving reasonably towards 2% target, then the Fed will be obeying the second mandate. So the Fed might be more reactive to the job market. So if the job market data is showing worsening results, then the Fed may react to that. But so far, we don't have sufficient data for until the next meeting. So there'll be more reports coming in. So we'll be telling them, including the non-farm payrolls, which already happened, now the weekly unemployment claims, and more data to come. So on the manufacturing indices, here we look at both New York and Philadelphia. For those who don't know, Empire State is a slang for New York. So here we'll be looking at a level of diffusion index based on surveyed manufacturers in New York State, which basically focuses on about 200 manufacturers in New York State, which asks respondents to rate the relative level of general business conditions. So it's usually a leading indicator showing us what to expect for the overall manufacturing index in the US economy. So some of the top manufacturing districts, which includes Philadelphia. For the Philadelphia survey, we have around 250 manufacturers who respond to the survey. And The main reason that this data is important is because it shows as a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be another signal of future economic activity, such as spending, hiring, and investment. So normally, when manufacturing indices are up, it tends to be positive for the dollar. If they are weak, then it's negative for the dollar. So here we are expecting an increase for the MPASET manufacturing index, which would be a big shift from negative 3.9 to positive 0.8. And also for Philadelphia, we expect a big shift from negative 10.2 to negative 1.6, very much closer number to zero before we flip into the positive. So clearly, if both data come in better than expected, then that will be an indication that manufacturing is back on the rally, and that could be positive for the US dollar in this afternoon. So back to the original question of the presentation today, and that is, should we be buying the silver dip? So why is the question our topic for today? Well, there is quite a number of things. One of them being one of the reasons why we chose this question is because yesterday, around midnight, silver prices dropped by around 8.3%. And that was a big surprise drop, a big increase in volatility. But then we have seen silver rebounding, but then other metals did not experience the same. So it might be an isolated incident, and the market is still bullish as usual. So let's look at other things happening in the markets today. I believe earnings are back. So usually when the earnings season is starting, we tend to see banks beginning by reporting their earnings. So on the earnings side, some of the highlights will include two annual general meetings for two major companies. That is Costco Wholesale Corporation and Micron Technology Incorporated. Then the earnings will begin with Morgan Stanley, which will be reporting today, Goldman Sachs, BlackRock, Reliance Strategic Investments, JB Hunt Transport Services, HDFC, Standard Life Insurance Company, Bitmain Immersion Technologies, First Horizon National Corp, Commerce Bank Shares, Nippon Prologies, and many other companies will be reporting today. Of course, the focus will be on the top banks reporting today, which will be Morgan Stanley and Goldman Sachs. So that being said, Morgan Stanley, Goldman Sachs, and of course BlackRock, those three banks will be major highlights for the day, setting the tone for the earnings season. So on the other hand, copper is still pumping and hitting new highs, with today's price being $5.9519. So with copper being on such a strong rally, for instance, if you look at the past 1 month, you'd notice it has been more of a consistent bullish market despite today's drop. So you can see that for today's drop, it's down 1.69%, which is a welcome pullback. But the idea is that copper has been on a strong bullish momentum, having bottomed in August last year at 4.36. Now it's at 5.9, almost hitting $6. And some of the companies benefiting from this strong momentum are copper miners. So one of the biggest copper miners in the US is called Freeport-McMoRan. Freeport-McMoRan, often called Freeport, is an American mining company based in the Freeport-McMoRan Center in Phoenix, Arizona. The company is the world's largest producer of molybdenum, a major copper producer, and operates the world's largest gold mine. So seeing the current rally happening in gold as well as copper, the company is benefiting directly. And as you can see, year to date, since the year started, the stock is up 16.21%. And in the last 1 year, which includes the same date last year, 15th of January to today, the company stock is up 50.76%. So it might be a good candidate if you're looking to invest into a stock. So not investment advice. Consider it adding it to your watch list. Do further research. If you find it attractive, then you can make your own independent decision. All right, I'm back. So other than that, also looking at other things happening in the markets. So as mentioned, from the UK economy, there was an expansion of 0.3% month over month in the month of November 2025, rebounding from a 0.1% contraction in October and outperforming market expectations of 0.1% growth. Services sector led the recovery, growing by 0.3% and reversing a 0.3% decline in the prior month. Professional, scientific, and technical activities made a strong contribution, rising by 1.7%, followed by ICT, which was up 1.5% due to gains in computer programming consultancy and related activities and wholesale and retail trade. So, other than that, the Fed bets on a rate cut are still very minimal at 5%, and the probability of the Fed holding interest rates steady at the current level is still 95% for the meeting set on 28th January 2026. So on the currency side, the dollar has been one of the strongest currencies, together with the Australian dollar. The Australian dollar tends to be positively correlated with gold, so that it sprains a lot. But then the weakest currency seems to be the Swiss franc, which is down 0.23% today. Canadian dollar 0.2% down, and the yen down 0.16. And of course, if we do an year-to-date performance, the dollar is still the strongest currency, together with the Australian dollar. Whereas weaknesses can be observed mostly in the yen and the Canadian dollar, which are down 1.16 and 1.33%. That's for the two pairs. So Bitcoin is on a strong rebound. So if you look at the year-to-date performance, it has already gained by 10% against the USD. So perhaps after last year's underperformance, we could be seeing some strong rally this year. So yesterday's stocks were not doing really well. The SP 500, the Dow, and the Nasdaq all had losses by the end of the day. Mainly led by a broader sell-off in the tech sector. You can see companies such as Microsoft, Oracle, Broadcom, Nvidia, Amazon, Google, Meta, Tesla, Apple, all were in the losses, leading to an overall loss despite seeing positive returns in utilities, real estate, and energy sector. So also, in consumer defensive sector, we had a couple of top performers, including Philip Morris International, which was up 3.15%. So on other news, on individual stocks, TSMC quarter four profit was up 35% to record, beats expectations. So the world's largest contract chip maker posted a 35% jump in fourth quarter net profit on Thursday, beating market forecasts and hitting a record as it benefited from surging demand for semiconductors used in AI applications. So Taiwan Semiconductor Manufacturing Company, whose customers include Nvidia and Apple, saw October-December net profit rise to $505.7 billion. That's Taiwanese dollars, which is around $16.01 billion. So clearly, the AI boom continues. So the ones being contract manufacturer and manufacturing some of these major semiconductors for Apple and Nvidia. So if their demand is going up and they're selling more, then that basically tells us that the AI trade is still very much alive. So so as mentioned yesterday, the major tech companies were on the losing side. So trying to see if there's anything new. No, nothing new there. Yes, Greenland and Iran tensions drive investors to gold and silver. So we remember after Trump went for Maduro in Venezuela, and now he's really focused on Greenland. And of course, escalating tensions between Iran and the US are also driving sentiment. Investors who are wary of such risks are going for safe haven assets. In this case, going for assets such as gold and silver, and this can be already seen on the charts, where gold and silver has been on a strong rally, continuing last year's performance, and this year they started on quite a positive note. So even before convening in the White House, Greenland has made it clear it will choose Denmark, while Trump emphasized anything less than the US control of the island is unacceptable. So the negotiations continue, but the guys are sticking to Denmark. So, but they may get a speedy recovery. They want semiconductor manufacturing company, the world's largest contract chip manufacturer, reported better than expected earnings, which was a 95% increase in fourth quarter profit from an year earlier. So, US froze new immigrant visas for 75 countries. Luckily, Kenya was not one of them. Toyota Industries hit record high, shares rose almost 6%. Following Toyota Motor raising its tender offer price for buying out the car maker by more than 15%. China opens strip.com and the trust probe. That was a big probe. And whenever China targets a tech company, shares tend to like plummet real fast. So in this case, the shares went down over 22% on the news. So major indices fell on Wednesday. This was already witnessed yesterday, and gold and silver smashing records, despite an 8.3% sell-off happening last night. So I'm trying to see if I've covered everything we needed to know for the day. And yes, for those who are new, these sessions happen every day, Monday to Friday at 11 a.m. So today I was a bit late. I was really trying to clear my sinuses. So the sessions are recorded. So just in case you're not there in time to attend the session live, you can check it out later on YouTube, as well as on X on both FXPesa profile. For my personal sessions, they're also available on my personal profile at Rufus KE. And we also have the Bullish Banter podcast, and we have new episodes coming up. So make sure to check out the podcast and prior episodes. See what other traders have experienced, how they approach the markets, and many more, much more information on the podcast. So other than that, we have Subaru Company Limited reporting their earnings today. The stock is not compared to other companies. It's up 2.97% since the year started. But then we could be seeing some explosive price action later today once the company announces its earnings later today. So that being said, I believe it's time we go for some technical analysis and see where the opportunities may lie. So this is the MetaTrader 5 trading application, the app that we use for trading on desktop. If you prefer trading using a smartphone, then you might check out the Equity Trader by FXPesa. I'll be sharing the description. It's available on all app stores and Google Play Store. So check out Equity Trader by FXPesa. Just type that in the comment section. So let's start with the elephant in the house, which is silver. So last night there was a big drop. Notice right from midnight. The sharp drop was down 8.39%, and so far the silver has recovered. It's only down by 4.18%. So the question is it the right time to buy the silver dip? And my answer is yes. So nothing major was happening in the market, so this remains as normal market volatility. It might be signs that volatility is increasing in silver, but the bullish market is still very strong. So the thing is, there's still a shortage of silver. Nobody has discovered any sudden silver to fix the gap in the markets. And the difference in price between the Chinese market and the US market is almost $12. So this means that if you buy silver in the US market, there's no hope of getting a delivery because there is that shortage. And the Chinese are blocking exports. So this makes the divergence even wider. And as a result, we expect the bull market to continue. So in this case, even after the sharp sell-off, you can see buyers coming in really strong and reversing the price action. So of course, today's target should be at least the market recovering 100%, getting the previous high of $93.7 per ounce of silver. So as for gold, we had discussed a potential breakout retest continuation kind of formation on Tuesday. So it didn't play out exactly as we expected. Notice the pullback didn't get to where we wanted it to be. So the lowest we ever got on that particular day was 45.69. But then when you compare that with the tops here, then you notice that gold is now officially in the range. So we can officially say that gold has been trading in the range for the last 3 days, today being the 4th, which means that the idea of buying gold might be even better around the lower trend line. And once the market gets to the lower trend line, then that's where we expect to identify opportunities. So perhaps we start looking for opportunities whenever gold retests this particular bottom, trading inside the range. So as for US equities, US 30 or the Dow Jones is still in a range. I would say for the last 8 trading sessions, trading sideways, and now the current momentum, we just bounced from the lower trend line yesterday. So now we might be moving to the upper trend line. Just like on Tuesday, we were on this end. We projected a drop and the market went as expected. So now we are looking at a bounce and moving higher. So we looked at the wedge happening in the Nasdaq, and we projected that the market would bounce from this trend line and go all the way down to this trend line. However, as per yesterday, there was a break and the market rebounded immediately, which means it was a fake breakout. And this implies that the breakout might now happen towards the upper side. So for now, the short-term angle is trading towards the upper trend line. So that is already playing out. Notice the strong momentum as of this morning. So the same case happening in the Nasdaq is also happening with the SP 500. So we projected a drop to this area. The market broke the support, but then got right back into it. And now we're looking at a potential rally towards the upper trend line. Bitcoin is making a very important case for a bullish momentum. So from the 1 hour time frame, notice how we had a pullback. We completed the pullback, got to the previous high. We broke it, retested, and made a continuation. And now after this morning's pullback, it seems like we are headed for some further continuation. So short-term targets should be around 97,949 with the potential for breaking higher. So on the indices side, we have covered the US indices. The Hang Seng Index, we saw some more pullback playing out on Tuesday, didn't quite get to our target. Instead, what we got was a market that was finding support around this area here. And after finding support and moving higher, we didn't get much of an acceleration. So the highest price we got was right here, which means that since then, this market is trading in a range. So if we map the bottom and the top, then we can see that this market has just been trading sideways for the last 2 days, including today, now 3 days. So you look at UK 100, it projected a break. The bridge played out short term on the lower side. So a very sharp drop to this area here. And immediately we got to that drop, the market bounced and eventually got a break yesterday, which led to a strong rally. Notice after the break here, we had a strong rally. And then this morning we had a sharp drop. And now, as we enter the London session, you can already see the buyers coming back in. So the idea here is to continue trading in the direction of the trend. You look at the daily time frame; it's a very strong bullish momentum. So you don't want to be trading against that. So such a pullback is welcome, especially at London Open. So we expect more bullish momentum. So for the Nikkei 225 index, we projected a pullback to this area and then a bounce, which played out as perfect as possible. Yesterday, there was some form of pullback, and today, some form of continuation, which means that on the 15 minutes chart, we are now getting some form of chart pattern. So for a 3-day price action movement, you can see that this is turning out to be a really important support area. And for the resistance area, you can see it's following a path along here, which implies that if we happen to see a break here above the previous high, then price could extend the bullish momentum all the way up to this upper trend line here. So on the currency side, we have the dollar yen, which we projected to hit 160 price level. So the highest we got was 159.444, and then a pullback, which basically reminds us that the price doesn't move in a straight line. So whenever you're projecting a strong bullish market, sometimes there will be these pullbacks, and these pullbacks represent opportunity to buy at even lower prices. Remember, we're still following the trend. It's a very strong bullish momentum trend. So after the pullback here, we still expect the market to retest 159.444 with potential expansion to 160. So for the dollar Swiss franc, there was a pullback here, and then on Tuesday we expected the market would recover completely back to the previous high, played out as expected. Wednesday a pullback and now a rally, and now we have what looks like a cap and a handle on dollar Swiss franc, which is a continuation pattern, which implies that today we could complete the path, not all the way up, but to this particular trend line. So the trend line is not very far off. So if you were to project a price action area, it would be somewhere around 0.80334. So you go to a smaller time frame, such as the 1 hour time frame. So if we breach this area, then perhaps this will be our resistance, 0.80334. And that can be seen on the forward chart acting as a resistance in the prior type periods. So look at Euro USD. The general direction is bearish. So the euro is losing even more to the dollar. We expected more bearish momentum here on Tuesday. Wednesday we kept pushing lower, and we have not yet touched last week's low. So that could be our target for the day. Last week's low being a couple of pips lower. So in this case, more bearish momentum towards 1.16188. So for the pound USD, you look at the daily time frame. This is the kind of formation we have, and we just got from the upper trend line, so we are moving down lower. So from the forward time frame, there was a very strong rally to this particular trend line. We got to that trend line, and now the low we got last week and this week was lower than the previous week, which implies we are headed much lower. Then from the 1 hour time frame, this is what we have from the 15 minutes from Tuesday, Wednesday high, and then today's high. It seems like we are retesting this area yet again, or this particular trend line. And if it proves strong enough to act as resistance, then a potential drop and break below this area could be playing out. So AUD USD, we are with a very strong correlation with gold. We projected that the market would drop to this area here, played out as expected. Strong rally in early morning Wednesday, and then a sharp drop. And then today we are getting that much expected rally. So of course, I expect the AUD/USD to rally to the previous high, a high that we had already seen on Monday this week. Sorry for that. The dollar index is still pushing higher, currently at 99.948. So despite projections that the dollar would weaken, in the last 2 weeks and now the third week, we have seen a very strong dollar index. So that explains a lot, especially on these pairs. For instance, you look at New Zealand USD. This seems to be our prevailing market pattern. New Zealand dollar losing to the USD, and if you look at the lows we have been experiencing, they're also getting lower. So despite the attempts at pullbacks, at some point we expect the market to meet resistance and then continue in the bearish momentum given the strength of the dollar right now. So I expect something along these lines for New Zealand USD. For the DAX, we have entered some form of correction after a very strong rally in the last couple of weeks. So on the 1 hour time frame, we got to a high here on Tuesday. Then on Wednesday, we started some form of bearish momentum. And then today, being Thursday, we attempted to break this area here, but now it's forming a very strong trend line on the 15 minutes. And now from there, we are seeing a very sharp drop after we go to that particular trend line, which could likely extend towards the lower trend line here. So for the EU50, we are seeing a very strong momentum, but now it seems like the market is forming some form of reversal pattern, which could be an M formation or even some range where the market moves sideways for a while before identifying a major direction. So I would say for now, it's a market that is behaving more like a range, a sideways momentum, which shows weakness in the prevailing trend, which was a bullish momentum trend. So some form of pullback is expected in the EU 50. So the French stock market index also showed some weakness after entering into some form of range. So I would say this range continued. I remember on Tuesday we talked about a bounce from the lower trend line, which already played out here. Wednesday pullback again, but now we are breaching the lower side, which implies some form of pullback. So some further downside market reaction is expected. So Swiss stock market index also showing some weakness after opening with a gap higher. So some pullback. Of course, for Freeport McMoran, the company we talked about, with the biggest copper mine in the US, showing some strong momentum. So currently at $60.37 per share, is expected to continue the bullish momentum. And as you can see, since the low that we saw on November last year, the stock is up over 55% this year. So clearly one of the best performing stocks around. And silver, this is copper futures. They're showing some form of pullback. So if you go to the 1 hour time frame and you look at the high we saw yesterday versus today's low, it's down 3.98, almost 4%. And we could be seeing some form of a market pattern playing out here, where we get a sharp drop to the lower trend line, just as we had last week, and then the market bounces from a key level support along this particular trend line, and that would be amazing for people who are looking to pick up some more bullish positions on copper futures. So lastly, on dollar card, still some form of sideways momentum. We all understand these kind of markets where prices just moving sideways, and now after the break that we have seen here, so likely implies that now we are headed for the prior high or basically a return back to mean. So if this was a sharp drop and then a consolidation, then we are going for a return back to mean. So when I say a sharp drop, I'm talking about this. Then the market does this consolidation, and then a return back to mean. This is where the move originally started, and that's for USD CAD. So let's check on the comment section to see if there's any thing that we have missed. So waiting to learn. Thank you, Julius, for joining. Hello, Odiwa Opar, African Curious, Lulu Mandaro, can see 9088, Simon Gitonga, good morning. Samit Jadi, does oil prices only move in response to changes in demand? No. Oil prices respond to a couple of things. So most impactful is usually the changes in supply. So the people who buy and distribute oil, which includes the OPEC countries, also the US, they really impact oil. Oil infrastructure is also a major mover, especially with geopolitics. If oil infrastructure is bombed or launched, new routes and everything, that impacts oil prices. And of course, global demand, which can be tracked using GDP and manufacturing reports, especially from China, which is the world's biggest importer of oil. So we already did Euro USD, we did AUD USD. So we normally don't do crosses because they are covered. So if we analyze Euro USD and then AUD USD, then we have basically covered Euro AUD, which is a derivative of the two. Thoughts on gold. Here we are looking at more continuation of the bullish momentum. And as we saw with gold and silver recovery as of this morning, yes, we are on a sideways range. So most likely we should be waiting for a bounce along the lower trend line, especially if there was a liquidity gap. Trying to see if there's anything I may have missed. I think my app is broken, so let me try. Yes, we already covered gold, so make sure to check the recording after this. On the person, I think accurate asking how to join, just visit fxpesa.com and register for a trading account, or just check on FXPesa YouTube. Check the links in the description of the video below, and then register for a trading account. It's free of charge to register. Get to learn from our free resources, and then from there you can potentially go live. Silver bulls are already back. I think if the market was down 8% and it has already recovered 4, good chance that we see full recovery today, especially because the sudden drop in the midnight wasn't backed by any fundamental news. Good question. When is the best quarter to buy US stock and shares? I don't think we buy shares based on the quarter. We buy shares based on the price of the stock versus the value proposition of the company. So if it's a good company and you get it at a good price, then you can buy it at any quarter. So we already covered Euro USD. So I believe I've addressed all the questions raised in the comment section today. So thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. Remember, the next session tomorrow will be handled by Prudence Maximilian from Dar, Tanzania. So make sure to check it out. Same time, 11 a.m. And I wish you a happy trading session. That's it for the day. Adios.